Okay, good morning, everybody, and welcome to the Saturday morning webinar series. Today's topic is the RSI Powerzones template. It's been in the Edgerater software for quite a while, almost a year, but we haven't actually done any webinar on it before, and I think it's a template that a lot of people are missing in their selection of templates that they look at on a regular basis, but this is quite an interesting one, and we're going to get into the entire details of it today and how to backtest and all that kind of thing. So should be exciting. I really have to go at the pretty much, I can't run over today. I have another thing to get to, so we'll try and get the questions out of the way a little sooner today and then hopefully wrap up before the top of the hour. So let's go ahead, get started. Of course, there's a standard disclaimer. RSI Powerzones template, where can you find it? It's in the Buy the Fear, Sell the Greed category. So if you come into Edgerater and you go to your template library, you will see it. If you scroll down, probably you don't have this category showing right away. It could be at the bottom of the list, but it's scroll down in your categories and you'll find it there. This is a book that was released last year by Larry Connors, who's authored several books on trading, all about quantified trading strategies. He also wrote the High Probability ETF Trading Strategies book, which had seven strategies that continue to be profitable. This is a new one, and it has also 7 different strategies. And the first one in the book is called Buy the Fear, Sell the Greed. So the best thing to do to find more information about this is actually just to run Edgerater. And there are a couple of links that we'll go through, but when you open up the template, I'll show you this. You'll have an opportunity to click on more info for the template. You will go to this page here. And then there's a blog post, which I'll also explain because that's got some really good information in here that we're going to go over in this webinar. So you can either use this link here or just run the template and you'll find the links in there too. Okay. So as has become standard for me to do, I'd like to just kind of review a little bit about last week, because we did talk about the market last week, and the big thing that was on my list of things to watch was gold. And we closed the month now. That was a monthly close in gold at above 5-year highs. So it did actually, let's bring up a chart of gold just to show what we're talking about here. So here's GLD. So last week we were talking about it this would have been Friday's close last week, and it closed, GLD closed at 131.97, and that was actually a breakout, but was not obviously a monthly breakout because the month did not close. Month is now closed, and you had this sort of action in gold, fairly volatile, but still higher than last Friday. So I think this is still something that's on. It should be on your radar to watch. If you look at a monthly chart, you can see that here's the monthly bar that brings you above all of these highs over here. So whether it can sustain above this level will be very interesting to watch. And it's really been nothing but disappointing for gold bulls up until this point. Anytime there's been any kind of rally and people are getting excited, it's always been sold off. So but there is a clear break above these highs, and I think this is something to continue to watch in the coming weeks and months. So if you look at the good, bad, ugly, this is a template I like to run fairly frequently. Sometimes run this on all securities, the all USA list, and find out of all of the stocks in the database what's been good, bad, and not so good, bad, and ugly for various time frames. But I'll just run this on the gold miner GDX ETF group, and this is the breakdown of all of the stocks that are in that group. And the result of that is here. And as you can see from here, I'll sort this by week. So we'll see what was the best gold stock for the week. That was New gold. And if we look at new gold, I'll put this on a daily chart. You can see this is really coming off some pretty low levels from where it has been. And seems to have gotten some signs of life down here. This big, large volume bar here, and now, you know, some breakouts. Yeah, so some life coming into new gold, but you can see that it has been beaten down, as a lot of the gold stocks have. Then there's Edgerater that came up on the list last week. As if you look at prior weeks over here, that was a 27% gain last week. Did okay again this week. Over here, 7%. And then you can go down through this list, and you can find in all of the GDX stocks for the week to date, you have quite a large number that are either no change or positive change, and then you only have 1, 2, 3, 4 that are down for the week. And if you look, let's look at the worst performer. That would be Cisco Gold, and you can see, yeah, not much. Yeah, so that didn't perform as well as the others, but still, it's you know, if you squint at this the right way, I think you can see that this might be still in a range that's not being sold yet. So still a group to watch. And I think if you are interested in playing gold, you can either do GLD on the ETF, or you could obviously change your trade the futures, or GDX is also a opportunity. If we look at the GDX chart, GDX, and compare that to the gold chart, GLD, you see really they're very, very similar. GDX, obviously GDX is a lot cheaper. Okay. Well, what I also like to look at is the bucket migration. I've been publishing this on a daily basis. If you've been, I did mention this last week, but if you go to the Edgerater page at the end of every day, and when I have new, freshly updated data from the premium data provider, and then I publish that data, process it, and push it out to all Edgerater users, then I also produce this or run the %B migration report, and then take a snapshot of the chart. And I've been putting it on the homepage here. And this has been a very interesting. The shape of this chart has been very interesting over the last week, and I think it's probably worth taking a quick look at this. I always run this on. Well, you could run it on the CBOE weeklies list, but the list that Ian Woodward always used was the S&P 1500 list, and so that's what I'll use. That contains a lot more stocks, and we'll just quickly run that. And there were a lot of questions last week about whether the market is going to go up and down, and obviously, you know, nobody really knows. Otherwise, everybody would be a millionaire. But this was the situation. Well, that's the situation today, but let's go back to where we were. So this was last Friday, the close of last Friday, and this was a very healthy looking shape to this % buckets. Most of the stocks were trading in there in the upper part of their Bollinger Bands. You had the 0.7 through to 0.9 that was looking very healthy. But the way the week progressed was very interesting, because we had on Monday a shift over to the left, and on Tuesday a shift further to the left. And you can see that let's put this in percentage terms. You can see that the stocks below their lower Bollinger Band started to increase. On the 26th, we had even more of a shift to the left. 27th, which was Thursday, and then you got 68% above the mid band. And then Friday, and this all really happened, I think, in the last hour of the day. There was quite a large move higher, and actually the E-mini futures went a lot higher after the regular SPY closed. I say a lot higher, is only about 1 SPY point higher. So now you have this this shape, and the total move in SPY for the week is just, if you look at SPY itself, it's just been really no change, probably down 1 point. But if you look at the futures, then you'll see that the futures actually ended up higher than they were last Friday. So obviously, there's lots of talk about the summit, the G20 summit, and the outcome of that, whether there's going to be trade deals with China, and what's going to happen with Iran and all that sort of thing. So lots of things to pay attention to in the market. But right now, it's looking still pretty healthy. And then if we take a look at the US market summary, I'll just quickly run this. And remember, this is a template this one you really need to have HGSI, High Growth Stock Investor software. And there's a link between Edgerater and HGSI, where Edgerater will get the symbols. These are the symbols that are used, which are major market indexes, and they're delivered in the HGSI program. And Edgerater can read that database and produce this report. Excuse me. So here you can see back on, and we talked about this last week too, June the 4th, you had this solid blue line, percent B 1 day change was above 0.25. This is your kahuna, as Ian would call it. And this is after this red area comes in percent B, you get this blue line, things start changing yellow, and then they're green. And solid green is the healthy market. You've got some last week. Some of the markets were yellow for a while, which is always a warning sign because yellows can turn to red. But then on Friday, in the last hour, there was a good move, and everything ended up green again. So still a pretty healthy market. Yeah, so Abraham, you're talking about how do you interpret the dynamics of the bucket report, and it's obviously very subjective. I'm not sure of the the statistics behind what tends to happen after certain shapes of this curve or the profile here, but if you think about it in terms of just where stocks are in relation to their Bollinger Bands, and the Bollinger Bands are volatility bands around price movement. And if a stock is at the top end of its Bollinger Bands, then obviously it's towards the top of its volatility range. So it could, has a chance there for, obviously it can continue rising up the top end of the Bollinger Band. But it's doing relatively well. The standard period for Bollinger Bands are 20 periods, so it's doing relatively well over the last 20 periods. And so looking at where stocks are in relation to the Bollinger Bands, are they at the mid band or towards the upper end of the band? If you take an overall market view of that, and you can bucketize the individual stocks in a larger index, you can just get a more of a breadth feel for the market. And I would just characterize it in terms of, is the market healthy, or is it, if things are more towards the red area, then obviously there's warning signs. If you've got huge number of stocks that are below their lower Bollinger Band, then obviously that's the market's in some kind of crisis mode. But often those are times when you can get rebounds too. And also, if the market, if everything is above the upper Bollinger Band, then that's a little over exuberance, and you can watch for. And I think if you go back and you look at the report, at times when those two extremes have been achieved, you will find that it tends to go back to normal within a few days. So, but I would just characterize this in terms of look at the shape of this and just determine, is it looking healthy or not? If you always trade in a healthy market, then that can be maybe less stressful. Okay. KL, so William, Bill, KL is not in your gold miners watch list. That's Kirkland Lake, I'm assuming. That list is just a list of stocks that are in the GDX. So I'm not sure if KL has just been added to GDX or if it's in there or not. I don't know. But if it does get added, then that will appear in my list too. And also the idea of putting the US market summary on the home page of the website, that is a thought. Everything that it just takes time to do a lot of these things, right? So I'm already doing the processing of all the data every day, pushing that out, updating all the clients with that, and then I've added this extra step of running this report, taking the snapshot, putting this on the website. The more that I do in that area, it just takes more and more time. So it's a thought, and it could be interesting. It just depends if there's a lot of interest for it. I know a lot of people have HDSI, and you can just run the reports yourself, which is probably the recommended approach. And I'm thinking of doing a webinar in the coming weeks on the Edgerater's integration with HDSI, because it's not just about pulling data from that program, but there's lots of great things they have in there with industry groups, and Edgerater's got some neat integrations where you can do seasonality reports and other kinds of reports on the whole industry groups, and then you can actually see what stocks are contained in those industry groups. But all of that information of the containment of stocks within industry groups is in HDSI. And I've actually done quite a lot of work to bring that into Edgerater. So I'm thinking about doing that. But in order to do that, so it doesn't appeal to everybody because you do need to have HDSI, and but it is actually a very useful program, and the annual fee for HDSI is actually relatively cheap, so worth having, I would think. Okay, so now let's get on to what the topic of today's webinar, which is RSI Powerzones. As I said, you will find it if you scroll down to your buy the fear, sell the greed category, and you'll find two templates in there. There are actually 7 strategies in that book, but so far I've only implemented the rules for 2 of them, RSI Powerzones and Crash. The others will be coming. And so let's take a look at RSI Powerzones. I've put I've highlighted the star here so that it appears up in my favorites list. So it's easy for me to find, RSI Powerzones. And I said I was going to show you how to find more information about this. So let me just, first of all, just make sure I have a good list selected for this. And we'll talk about this in a sec. So if you come to any of the templates and you go to the template info, once you've got the templates showing in the main screen, you can go to template info. And this will bring up, if it's been linked, not all of them have a special information page, but this one does. This will take you to the Edgerater page on this template. So there's a little bit of a summary of what the template does. It normally will show you a chart that's appropriate for the strategy, and then also it will show you an example of the report. But in this case, there is also a blog post that very few of the templates have a blog post associated with them because they don't really need it. But this one, it's worth having the information. So if you click on either a view blog post down here or how to use over here, you will find the blog post that I wrote, okay, on RSI Powerzones. Okay, so there's a strategy that has very simple rules. There are basically 4 rules for this strategy. First of all, the book is talking about it's only testing on SPY, S-P-Y. The book does mention that there have been good results found when testing on another group of 20 liquid ETFs. You really need to buy the book, by the way, to read the rules. And I'm not reproducing content from the book. It's all proprietary, copyrighted information, so I'm not repeating that. But the formulas are, you can't copyright formulas, so I can explain what the formulas are and describe them in my own words. So here is the rules for the strategy. So SPY must be trading above the 200-day simple moving average. Pretty simple. If that's the case, then you buy 1 unit on the close when the 4-period RSI crosses under a threshold level. So threshold level 1. These are variables that we'll talk about in a sec. And then if you're in that trade, you can buy a second unit of SPY when 4-period RSI crosses under threshold level 2. So you just have two units, and you could sell the entire position when the 4-period RSI crosses above the exit threshold. And here are the threshold levels that the book tested. You've got, so RSI, 4-period RSI being under 30 would be threshold level 1, under 25 would be threshold level 2, exit of 55. And then the second one that's tested was a more strict, so you'd get fewer of these conditions. You've got a 25-20, but it's still the same exit at 55. So for RSI to be below 25, it takes quite a lot of, it doesn't happen very often, let's say that. And also the book, if you read the book, states that you've got over 90% profitable trades in SPY in the 30, 25, 55 strategy, and 92% profitable with 25, 20, and 55, but fewer trades. So here's an example of some trades. And this isn't, now compare this to, we talked about the 220 EMA upside breakout strategy, which is a trend following strategy where you're trying to make a lot of money on an extended move. So you have, maybe you only have 30% of those trades are winning trades, but you have large percentage gains. On the other hand, this is a strategy that is high probability. So you're not trying to capture big trends. You're trying to capture the whole idea of the book is there's behavioral elements of the market where there's fear and greed, and you're trying to sort of capture those moments. And so you're not going for big wins, you're going for small gains, and we can go through the stats of the trades. But here's a typical, is this 1 year, 2018? Yeah, so it's 2018 through January through to August. You had your first buy with this green arrow here. You had your second buy down here because this was actually the start of a more deep sell. And then you were in these two trades. You held them. Market came down to the 200, and then it did come up to the sell point up here. You can see the RSI 4 down lower indicated down here. So it did reach back up to the 55, and that was the sell point. So this is a trade that lasted 9 days and basically broke even. Maybe gave you a little bit of stress during that time. Here's another example, and I didn't cherry pick these. This is just all of the trades in SPY that happened in 2018 through to August. Okay, so here's a 12-day trade with a negative 1.3% loss. Here's a 3-day trade with a 1.33% gain. Here's a 2-day trade with a 1.33% gain. And here's a 10-day trade with a 0.18%. So you see, it's not making big money. And actually, some of these trades are losing trades. But we have the stats for the last 20 years. And so even though in 2018, you only had a few trades, overall, this strategy seems to be profitable. But just bear in mind what you're looking for. You're not looking for huge gains. And as I said in here, this was a challenging period. So one of the 5 trades was a losing trade. 2 trades barely broke even, and 2 trades had just about the average return for all trades since 1993. So let's take a look at 2017. This is all of 2017. And this is more, if you run the stats, you'll see that the average hold for your trade is 6 days. So these first two trades actually met the average hold period. 0.68% gain and 0.89% gain. Not big percentages, but you're looking for consistent, high probability. So you want lots of these together. Then you've got a 4-day trade with a 1.57%, a 2-day trade with a 0.9%, 3-day trade with 1%, 4-day trade with 1%, 2-day trade with 0.85%. So this was a better year. There was 7 trades during this period, and they were all profitable. So let's take a look at let's go into Edgerater and take a look at the template. Yeah, Jim, I will definitely be putting the others into the program. Right now, the Connors systems that I have you'll find them if you come down into the category list. And there's quite a few of them. The original being high probability ETF trading, and that's a separate program within the Edgerater suite of software. There are 2 programs, Edgerater Pro and then high probability ETF trading. And you'll find those strategies in here too. High probability ETF trading is there. And there's also a bunch of strategy guides that Connors Group wrote. Things like 2-period RSI pullback trading, trading leveraged ETFs with Connors RSI pullback trading, VXX trend following, S&P 500 trading with Connors RSI, short selling stocks with Connors RSI. So there's quite a few Connors style templates in the program. You'll definitely find them in there. And then the thing, as we've just talked about, that I'm working on is completing the strategies that are in this book here. All right, so this is a strategy that works with or designed and has been tested on SPY. So in order to test this on SPY, create yourself a symbol list that contains only SPY, or choose a list that has SPY in it and then just highlight SPY. So you could do that with, you might have your CBOE weeklies that definitely has SPY in it. So you could uncheck all other stocks, come down and find SPY, check SPY, and then that's one way to run it. But then, you have to keep remembering to do that each time you run the template. So I just created a brand new list by going into the new list over here. I did that. I typed in SPY as my symbol, pressed tab a couple of times. I made my data provider Edgerater, and then made sure I had however many years of data you want to run the test on. Make sure you have that set up here in your data update options. This will create a separate, completely isolated snapshot of data only for the symbols that you've defined in here. So it's something isolated that you can run some back testing on. So a number of years would be important here. Once you've done that, you can save your list as whatever you want to call it. So I called mine spy.txt. Just as an example here, we'll call it SPY new, 10 years of data. And then you just hit the update data button, and that will then fill in your data, and you now have data from 2009 to 2019. So you can run that on. And then once you've done that, you'll find SPY new over here in your list. It will be right here. Right, we know that's only got 10 years of data. The one that I created earlier, I think I set that up to have, I chose 50 years of data. There is not 50 years of data in the software, so however much data there is will be pulled from the database, and it turns out that the first date was 1993. So that's the amount of data we're going to get to run the test. Before we run the test, well, so there are 2 aspects to this work that was done for this template. The first one is there's a script which will allow you to do backtesting, and we'll probably go into that one first. And then the second one is the actual template. And the template isn't designed to do backtesting. The template is designed to just show you the signals that are occurring today. and if trades are currently in progress to show you the state of play of those trades. And I'll just run this quickly now. If you run it on SPY, it's not very interesting because there's actually no open trade for SPY. Current open trade, blank. There is currently no trade. If you ran this though on a bigger list of ETFs, maybe you could run it on the sector ETFs. And run this template now. Then we can find that this list is now filled in a little bit more. And we can see that there's a few ETFs that currently have trades. And the template will show you what your current action is for the trade. If it says hold long, it means the trade is currently in play. It's happened. So I've double clicked on there. That brings up a chart that has been configured for the strategy. So it's got the RSI 4 down here, the volume down here, 200 period moving average. And then you've got arrows, green and red, indicating the first buy. Green is your buy point. When you've got two greens together, it means you've got two of those buy conditions occurred. Remember, there was a threshold level, RSI below 30, and then RSI below 25. Okay, that happened here. And then the sell when RSI got to 55, RSI 4 got to 55 was up here. So the charts will actually just show you with graphically where all the trades were. But you can see that this is actually still REZ is currently in a trade. This is the residential real estate ETF. And you can see what happened for this trade to be in place right now is that RSI 4 came below on this day here, which was Tuesday this week. Okay, RSI 4 came to 23.73. It's below the first threshold level. That would have been the first buy. So you're holding a stock here at the close of this bar. Next day, you're thinking this is not a good trade. It sells off even more and triggers buy point number 2. You're not going to do any more buys than 2. So you're in here. And right now, this is showing some, this is working out. You're not taking so much heat on the second trade. And probably it's roughly a break even at this point. In fact, we can see on the template what the state is. Currently, you have entry price 1 was 73.15. Entry date 1 was 6.25. Entry date 2, 6.26 the next day. Entry price 2, 71.68. Number of units, 2. Number of bars in trade so far is 4. Dollar gain, 0.5. % gain, 0.7. Okay, and so you've got a few of these that are currently in hold long, meaning the trade is on. And then on Friday, 3 hit exit point. And here's the gain or loss. It would also put a loss down here if it was a loss. Here's for these 3. So there was a gain of 3% in ITB, which is the home construction ETF. Let's look at that trade. Okay, so we've got first entry occurred down here. The reasoning behind the trade, the strategies, all explained in the book. And you can buy the book online. You can download it as a PDF. I think when I bought it, it was a PDF download. They probably have a hard copy too, but Amazon would be a good place to buy that. So first entry in ITB was down here, second entry down here, and then on Friday, RSI 4 came up to the 55 level, so it did trigger a exit of the trade. And you can also, so this was profitable trade at 3%, quite high if you could look at the numbers, and we'll take a look at the statistics when we go through the backtesting. And if you go back through the chart, you'll see another profitable trade here. This one only has 1 entry, so only the first entry was triggered. It never sold off to create a second entry below the second threshold level. It just came profitable and for an exit. So that's something to consider. At this point, you'll only be in 50% of a position. Whereas here, you'll be in a full a full 100% of a position. So when you buy this, you have to be, when the first entry, you have to just be aware that there could be another entry coming, and so you're not going to be 100% invested in this one position here. So let's take a look at some these other two that exited. There's the US financial ETF. Okay, one entry, and then there was an exit on Friday. If we look back through the chart, there was entry down here, an exit up here. So this one has been very successful in the last 3 trades. In fact, in the last 4 trades. So you can just go back through the chart. This is one way of, it's not obviously giving you statistics, but it's a way of visually verifying the strategy. You just go back and look at the chart. And then the last one that exited on Friday was the insurance ETF. Boom. And that, again, is a single entry. And if you go back through the charts, you had profitable trade here, also 2 entries and a profitable exit here. So far, the ones we've looked at have actually been doing pretty well. But what happened? Well, we'll see some times when it doesn't work out, and that what can occur during those times too. Anyway, that's the template. It's pretty straightforward, self-explanatory. I wouldn't bother looking beyond the column O. These are just calculated values that are used to display the current open trades. So you don't really need to go back and look at all of this information. Just stick with the green highlighted columns. You can run this on All USA as well and see what happens. But if you read the book, you'll see that he recommends trading this on liquid ETFs. But SPY is what it's really been tested on, and I'm just going to choose SPY from my list. And let's go back. Let's go now to, the other thing I should mention about the template is, remember in the book there are different threshold levels. So there's the 25, 20, and 55 level. And we talked about that. If you go back to the blog post, go back to the rules, 25, 20, and 55. Okay, that's one of the criteria that was tested. The other was 30, 25, and 55. So the way that you would get the different, run the template for the different levels is just anything that's highlighted in a template, the front page of a template with a orange background is something you can change. So if you wanted to change this to the 30, you could just type 30 in here, and then you go, this would then be 25 and 55. And once you've done that, you've pressed enter to make sure that the values have been accepted in the template. You can run this again. And you can still see that SPY, even with these threshold levels, doesn't have a current open trade. Okay, but that's how you change the threshold values there. So let's go over to the entries and exits tab, and the script that has been written for this strategy. If you select over in your chart scripts area and you select Control F, that puts you into find mode, and then type sim. All of the scripts that have got special simulations associated with them are sim underscore something. So this was sim underscore RSI Powerzones. Double click on that, pops over to the security selector. The script and the threshold levels are repeated here, 25, 20, and 55. And then all you have to do, make sure you've got that list selected, okay? And then you could also change date filter. I said you can either have ways of choosing your date range. One is make sure your symbol list and the backing data for this list is set up with the amount of data you want to test. Number 2, alternatively, you can set a date filter up here. So if you've got a list which has 20 years of data, but you only want to test one of those years, you don't have to regenerate a list with the right amount of data, and you can just choose your date filter and say, I'm just going to choose a date range in here. Okay, but because I'm just going to test the whole amount of data, I'm not going to bother with that, and I'm just going to hit the run up here. And There's only one symbol here, so it all happens fairly quickly. You'll see in this entry and exit report the dates that the entries will have occurred. Because this is a sim report, which has got special coding to also generate events for the exits, you'll find that the exits tab has also been filled in with exits. You don't have to really worry about this. This is just information that's used for when we go over to the trade simulation tab, because the trade simulation uses whatever is in your entries and exits to run the simulation. And the settings here, if you're using one of those special scripts with sim that's generated entries and exits, you can say use scripted entry and exit rules. And what that means is inside those scripts, sim_RSI Powerzones, there's information in there about the actual values for the entry and exit, you know, not just the entry on close, exit on close, but it's actually, if that wasn't, it is in this case, but if you had different levels for the entry, maybe there were entry on open or exit on open, they would be listed in that script, and then this would use those rules. Alternatively, you can say, I don't want to use the rules defined in the script, and I'm going to choose my own conditions for entering and exiting. I'm going to exit at the open or the close. But because it's all coded in the script, we don't need to worry about that. And then you can set up your portfolio rules down here. And that would really be the things that are important for this strategy. And it is explained in the blog post. So let me just verify that for you. Come down to the blog post, take a look at how to test. Remember, we just did this step, but RSI Powerzones scripts, we found that, popped it over into the list over here, into the entry exit tab. We ran this, created our entries and exits. Script settings, these are important. Choose yes here. And here, this is an important setting too. Allow duplicates, because this strategy allows you to enter a trade in a stock when there is already another position open, because remember, there are two entry points. The first entry at a certain RSI level and the second entry. So what we're saying here is we're going to scale those in, and these are the scaling values, 50% for the first one, 50% for the second one. So I have to make sure I set that. Scaling duplicates, 50 and 50. That's the default once I've got scaling set to true. And then initial equity, I'm going to say this simulation is going to start with $100,000 and it's going to trade $10,000 per trade. And then that's pretty much it. You just then press run, and you will get a list of all of the trades since 1993 for all of the symbols that you've chosen. I only chose one symbol. And it's going to put the entry and exit date for each of those. Now, once you've got this list showing, you can come over to your chart. And the chart is smart enough to know. Let's come down to here. I'll position the trade so it's roughly in the middle of the screen, so you can see where it is. And by positioning my chart so the trade's in the middle, what that means is anytime I scroll down to another trade in my list, it's always going to be positioned in the middle of the screen. So it tries to match your the position, just so that you know where things are. Obviously, as I scroll down through the dates are changing, so it can't show me a specific date range. It's just going to say, hey, show me the trade starting wherever you position the chart in the first place. Okay, so we'll take a look at, we can just scroll through the list quickly. This is one thing you can do, visually kind of check the trades, and you can just do this very, very quickly. The other thing, and it's useful to do, is there are statistics. We can look at those in a second, but you can also get a feel for the number of winners and losers by looking at the profit and loss column. You can actually sort by that. And you can see, even though this strategy running on SPY, okay, which is a major market ETF, and this strategy is only trying to pick up 1% maybe every trade. One time in 2011, lost 7%. Let's take a look at that, see what happened. Okay, so you had your entry here. The entry, by the way, is pointing to, you see it's pointing to empty space right now. Normally the arrow, when you're in the trade list and you come to the, you're clicking through the items in the trade list, this will point to the value listed for your entry price. So you can probably guess why this is pointing to a non-existing price. Any guesses? There were 2 entries. Okay, and this is giving you the average price of those entries. And that's the way this is reported. It's just giving you the average of the 2 entries, and then obviously the exit was down here. So this was a situation where you were expecting this to be a fear-based trade, and you were hoping for a quick bounce back up to RSI 4 above 55. Didn't happen, sold off even more. And you actually had to sit through this because there's nothing in the system that says, that specifies a hard stop. It's always stop when RSI 4 goes above 55 or touches 55. So if the market sold off even more without any kind of retrace, you would be stuck if you were following the rules of this strategy. And you got to bear this in mind. Can you sustain this? You would be stuck in this trade until it comes above here. So a lot of people don't like that aspect of the system, but when you run the stats over 20 years, you know, it works out okay, but you have to really bear that in mind. Now let's look at some others. So the biggest winning trade, let's take a look at that one. So we had a 7.8% winning trade, which is actually really unusual here because RSI 4 getting above 55 will get you out of a trade way before you end up with these big winners. So this had to be a very unusual period of time. And this was 1997. You can see there was entry here, and then very large green bar over here, and then RSI 4 reached 55 at this level here with a 7% gain. So this was a, these are extremes, outlier points, but they do happen. So you've got to be aware of the possibilities. Okay, so let's take a look at the stats, the summary here. This is another thing you can do in the program. Whenever you run a trade simulation, it will actually give you the counts of trades and some statistical information. So overall, since 1993, in SPY with the system, running with the 25, 20, 55 parameters, you had 155 trades. 139 winning trades, 16 losing trades. So your percentage of winners is very high. This is extraordinarily high. But your average win is 1.28%. So you have to, you know, it's very different to a trend trading system where your numbers might in a trend trading system would be, you might have 30% winners, but your average win could be 10% or 20%. So it's a very different kind of trading. The average length of a trade was 6 days. It's listed down here. And then take a look at some of these maximum favorable excursions and maximum adverse excursions. So the maximum favorable excursion was 8.24%. We saw the maximum closed trade was 7%, but actually at one point got to 8.24%. And then this adverse excursion, we saw that closed at negative 7% or a 7% loss. Actually, at one point in the trade, it was down 15%. So you know, it's always good to look at the stats down here. But you can see that if you had traded this with a starting equity of $100,000, you were putting 10,000 into each trade, then you would have had over that period of time 12% net profit. Let's look at the chart here. The daily equity would have changed like this. Anytime it's flat over here, like over here, and this was the dates were 2001 to, let's see, what would that be? Roughly 2003. Well, that is the .com crash, okay? No trades occurred there because SPY was not above the 200 period moving average, so it was flat. So generally, it's not trading in those periods of time. Another period here from 2007 to 2009, it was out. But it has quite a nice look to this curve. Or it's not really a curve, it's more of a roughly a straight line. And then recently, since 2017, if you're just trading SPY, 2017 to 2019, a 2-year period, nothing really has been going on with this. So, as I said, very few trades, and it's taking small profits on each trade. So the other thing that I mentioned is that in the book, it talks about trading this on not just SPY, but on other ETFs. So let's take a look at, let's go back over to the entries and exits. I'm going to choose from my list of symbols. I have a list of sector ETFs. Okay, so these are things like your iShares ETFs for the different sectors. And I have updated this. Let's see how much data I'm fetching for this. I've got 2 years. Let's go back. Let's choose 10 years of data. Yeah, and let's just make sure we update that so we get 2009 to 2019. This is how you test on more stocks. Just hit run over here. All right, now my list is populated. These are just events that are listed down here. So it means on any of these days, these are the stocks that hit one of the entry threshold levels. If you go over to the exits tab, it shows you the stocks that hit the exit threshold level. And then it's actually the trade simulation tab which knits those two things together. So if I have to run the trade simulation again now because I've changed my entries and exits. And now we can see that the list is bigger. There's 1,464 trades. And the biggest winner was 10%, biggest loser was 16% loss. The stats in this case are 80% winners, 20% losers. Average win about 1%. But this gives you more. So even though the stats are worse, it gives you more opportunities to employ that edge. Okay, if you were just trading SPY with this system, you don't have a lot of trades to make. So even though there's an edge, you can't really exploit that edge that frequently. Whereas you run this on a larger list, even though the stats are not as good as just trading SPY alone, it still has an edge, but you have more opportunity to exploit the edge. And here's the chart of that. It's over here, right? Okay. Okay, and this if you didn't follow exactly along with the what I was doing here, you can go back and watch this again, or just take a look at the blog post. It explains it pretty well what you need to do. And explains what the template. So the summary here that I mentioned basically is what I just said. I mean, it's just I'm not saying this is something you should use. My goal here is to implement the rules behind the strategy. It's up to you to decide whether that's something that you could employ to your benefit. But also my goal is to show how Edgerater is flexible and allows you to test things like this. And this is something that's canned in the system. You don't need to do any coding yourself. But Edgerater does have the capability of writing. You can write your own templates. You can even take this, and this one is all based around this sim_RSI Powerzones indicator. It's under the indicators list. But this is not hidden. You can actually click on the edit button over here. And this is the script itself. You can actually model your own strategies. This is the entire thing right here. Because it's fairly simple strategy, the script is not that long. And let's see if we can give you a rough idea of what's in here. You've got an indicator for the 200 period moving average. You've got RSI 4. Remember, that's one of the indicators for the threshold levels. And then there is a section here just detecting when the close is above the 200 period moving average. So 3 things are set up here. Your first entry, close above 200 period moving average, RSI value. Okay, that's RSI 4, less than the RSI entry level 1. RSI entry level 1 has been defined over here in your parameters. Entry level 1, entry level 2, and exit level. And so that's kind of how a script works. So you can take a look through these and either modify them to your own desire or create something new. So yeah, it's all in here. All right, let's get, let me just go back and see if the question, I'm going to have to finish this in a sec. So let's see what we have. Okay, Thomas, why aren't you using the Connor's RSI instead of the regular RSI? Well, this, as I said, this is a strategy from Connor's book, Buy the Fear, Sell the Greed. And he uses the RSI 4 for that. Can you change the RSI from 4 to something else? Well, because the book was talking about RSI 4, I didn't have that as a parameter that you can change. So if you wanted to change RSI from 4 to something else, I give you a clue how to do that. You just come back into the script. You'd have to save this script, and instead of using the 4 over here, change that to something else. And you would save this as a different name, and you could run that. You could run that test instead of running this one. Jim says, use Connor's strategies for pullbacks on volatile stocks like the IBD 50. Have to adjust the RSI levels, but they work. 42 consecutive wins. Yeah, that's pretty good. Okay, let's see over here. Okay, so Raj, how do you actually buy? Does this template trigger a buy signal at market close, right? So this was the testing part that we just looked at. Do that by bringing up a trade list, going through the list, look and come to the template. You don't need to go to the back testing after that point. That's all been done. You then come to the template, run your template, and this you would run this at the end of every day once you've got end of day data. Okay, the system. And this is an important point. This in the book, it's about trading at the close of the market. All right. Now, if you're only waiting for end of day data, which the Edgerater premium end of day data comes in about an hour after the market close, so you can't get the end of day data until an hour later. So how do you trade at the market close? Very good question. You can't do that. So what you can do is there's 2 things. One thing, you can test this using trade at market open instead of trade at market close. And you would just go into your trade simulation over here, and you change your rules to be from over here to be next bar on open instead of event bar on close. And you'd run that, and you'd see if that performs as well. But obviously, that's not what the book is recommending. So that's one thing you can do. But what I would say you would need to do is you need to run the template about 15 minutes before the market closes using your intraday update from Thinkorswim. So there is a hook to Thinkorswim in Edgerater, allowing you to get essentially an end of day bar. If you run it 15 minutes before the market closes, it will give you a bar which is pretty much going to be the close of the market. Now, something could happen in the last 15 minutes to invalidate any signals, but that's kind of rare. And so what I would do is run it 15 minutes before, do your end of day update, do your intraday update 15 minutes before the market closes, run this template, and then whoa, there's a plane taking off. And then do look for your trades, your exits or your entries in your template, and then you can obviously go and make that trade. You have enough time then to make that trade before the market closes. That's how the high probability ETF trading, how I recommend to do that as well. And it's all about having that intraday update capability, and that's currently only supported through Thinkorswim platform. So if you have Thinkorswim desktop, there's the let me just quickly show. I'm not going to show Thinkorswim. I just want to show that before you run this template, all you would do is you press this intraday update button over here, and that will, providing you have, there's what's called a Y to toss program. It's a free program you can find on Edgerater site. Will actually hook into your Thinkorswim current information, and it will give you a current bar. You can't get historical bars that way, but you can get the current open, high, low, and whatever the current price is. If you run it 15 minutes before the close, that you can assume that that's going to be the close of the day. You just run that. It would update this to then be the current day, and then and then time would say intraday instead of end of day, and run the template on that. Okay, great. Right. Yes, using options, of course. You can use options. You could use options to implement the trades, and be worth exploring. Okay, if you were using options, you might be able to avoid things like having those large, unfavorable or adverse excursions. But you do pay a price for options. I mean, there's a premium built in, and but on SPY, if you're talking about just trading SPY, the options on SPY are very tight spreads on SPY options, so it could actually work out. Bill, how does this strategy compare to high probability ETF strategies? This is similar. So the high probability ETF strategies are all based on reversion to the mean, and they all have different rules for figuring out oversold, short oversold conditions. And this is very similar. Different rules for figuring that out. But yes, this one is very similar. When you start getting into some of the others like crash, and then the others in the book that I haven't done yet, then you get into a different field. But this one is similar to high probability ETF. Is there a way to know which symbols in the ETF list aren't great for this strategy? Yes, there is. You would just run your report, not this report. You'd have to go back to your entries and exits, trade simulation, and then you could sort by symbol, and then you have your list of symbols and then the P&L per symbol. That's one way to kind of get a visual idea of it, but it doesn't tell you specifically in the report. You kind of have to, I would say what you'd want to do in that case is save this as an Excel file and open it up in Excel. So an easy way to do that is you do pop out. Pop out actually is just popped up the screen in a separate window. That allows me to save this. Now I can save this as samples.xlsx. All right, that's going to save this as an Excel file. Then what you can do is you can find that file. Let me just documents. Okay, it does require that you have Excel, but most people do. It's worthwhile having. And then in your trade list tab, you can do things like you might want to do this, say view, say data, put on the filter here, and then you could say symbol, I'm going to sort A to Z. And now you've got all your IAIs together. So what you can do is go down your PL%, just highlight that all the way through IAIs down to here, and just highlight them. And Excel will actually tell you the average, see average 0.36, count 69, sum 24.85%. You can see that. So that would be one way to kind of use Excel to get more information individually. Or if you just stick in Edgerater, you can obviously just run the individual symbols and get answers for the individual symbols. Could this be set up inversely? Sure what you mean by that. But if you're talking about like having high threshold levels, so you're looking for, yeah, if that's what you're talking about, this isn't, the script is specifically set for detecting moves below those lower thresholds, not for detecting moves above threshold levels. So you'd have to modify the script in order to do that. But you could definitely do that. It's not something that's written in the book as a strategy, but you could definitely do it in Edgerater and then test it. And I think, Eric, we talked about trading at the close versus at the open. I showed you how to test that, and you could actually go and have a look at the results there. Okay, guys, we are at time. I've really got it. Ooh, it's even later. I've got to get going. Thanks all for joining, and I won't have time to get this video up online probably until later tonight. So if you're looking for the replay, that will probably come tomorrow. So thanks all for joining. Good to see everybody here. Have a great rest of your weekend, and hopefully catch you next weekend too. Thank you all. Thanks, William, Abraham, everybody. Great. Yeah, thanks, guys. See you later.